Have you ever wondered what a real-world vacation rental investment actually looks like on paper? Well, today we're going to pull back the curtain on a real investor brochure for a condo down in Marina Vallarta to see how the numbers really stack up.
So let's just jump right to the headline number, the one that's designed to grab your attention, 8.3%. That's the projected net return on investment. And for an asset you can actually see and touch, that's a pretty powerful number. But what does it really mean?
So the big question is, how does an investment like this, a physical condo, actually generate that kind of return? What are the real ingredients, from the unit itself to the location, and yeah, the hidden expenses that all have to come together just right? Let's find out. Okay, so first up, let's take a look at the asset itself. Now, this isn't just an empty shell. It's what's known as a turnkey condo. And that basically means it's fully furnished and ready for a renter to walk in the door on day one. And it's smack in the heart of the very popular Marina Vallarta.
So here it is, the price tag, $480,000. That's the big upfront investment required to buy this specific ground floor unit in the Nima Bay development. It's the big number we're going to measure all of our returns against.
Right, so for nearly $500,000, what are you actually getting? Let's step inside, so to speak, and see the space that's supposed to be making all this money.
Okay, so looking at the floor plan here, you can see right away, this is not just your simple one-bedroom unit. At nearly 1,300 square feet, it's got a separate den and 2 full bathrooms, plus a pretty big private terrace. That kind of layout is absolutely crucial for maximizing how many guests it can comfortably sleep. And this is where you start to see the little things that really boost that rental income. The den means it can sleep 4 people, not just a couple. Huge difference. 2 full bathrooms, that's a massive deal for groups. And that private jacuzzi, come on, that's a major selling point. But most importantly, it is 100% furnished. You could literally start renting it out tomorrow.
But these days, renters, they aren't just paying for the 4 walls of the condo. A huge part of the appeal and the price they're willing to pay comes from the lifestyle and the amenities that are waiting just outside that front door.
And this is what really separates it from just a standard apartment. Renters get access to a rooftop pool, a spa, a gym, even a co-working space. The brochure basically argues that this whole amenity package is the key reason it can demand higher rates than its competitors. See, you're not just renting a condo, you're selling an entire resort experience.
And of course, let's be real, none of this works without the right location, right? The brochure calls Marina Vallarta a high-demand investment zone, which is basically just investor speak for there are a ton of tourists here all the time, and they all need a place to stay. All right, so we get the product. We see what makes it so attractive. Now for the part you've probably been waiting for, how does all of this translate back to that 8.3% return? Let's crunch the numbers. So the game plan for income here, it's all about being flexible. You could go the steady route, long-term rental, for about 50,000 pesos a month. Or you could chase the big money during peak tourist season, getting up to 3,500 US dollars a month. So by blending those two strategies, short-term and high season, maybe long-term in the off-season, the brochure projects a gross income of somewhere between $42,000 and $48,000 a year. But hey, gross income is what you tell your friends. Net profit is what you actually take to the bank. So what are the costs? Well, the brochure estimates about $8,000 a year for all the operating expenses, things like condo fees, utilities, and property taxes. And the math here is pretty straightforward. You take that top-end gross income, the 48 grand, you subtract the 8 grand in costs, and what are you left with? A net income, your actual profit, of $40,000 for the year. Simple as that. And this chart really shows you the core relationship of any investment, right? That big bar on the left, that's your initial cost, the $480,000 you put in. And that smaller bar, that's what that investment spits out in profit each year, 40 grand. And when you divide that profit by the initial cost, you get your ROI, which is exactly how we land back at that 8.3%.
Okay, so let's put this all together. What's the core argument here? What's the big investor thesis that makes this whole financial case work?
So this is basically the final pitch from the brochure, all boiled down into 6 key takeaways. It's arguing that because the property is turnkey, in a hot location, with amenities that crush the competition, it can pull in above-average returns with a lot of rental flexibility. The bottom line? It's presented as the perfect package for an investor who wants to generate that sweet passive income. And that kind of leaves us with a bigger question, doesn't it?
This whole case study really hinges on the value of those pools and gyms and concierge services. It really makes you wonder, in the modern vacation rental market, are we no longer just investing in square footage? Is the amenity package now just as crucial, maybe even more crucial than the apartment itself? It's something to think about.